Now that we've done the Series Seed round, let's do the Series A round, and you'll see how things are calculated a little bit different, but we get the same results as the cap table, and it's kind of just a check, and it kind of helps you understand how things kind of function a little bit better. So the first thing we need to do here is first thing you need to do is go in and copy all of these different rows for the headline or the titles. And then once you've done that, come in and go to number of shares owned for Series Seed, because that's what we know. We know that one. We can reference up here to the shares issued for Series Seed, get that 226030. The next thing is the amount invested for the Series A. So the amount invested for the Series A, we reference the cap table to get that amount. And we know Series A invested 2.1 million from row 26 here, and that was calculated as part of the cap table. After that, we can go to pre-money valuation, and the pre-money valuation is also referenced from the cap table, and that's right here when we did the Series A share price calcs. It's $10 million. After that, we do share price. So share price, also referenced from the cap table, and that's that 668 up there. That's part of the Series A round. Now we can do shares issued. So shares issued is calculated on this page, and that's the amount invested divided by the share price. So that's 314,558, which that should be consistent with what we got here on the cap table as well. After that, we can go into post-money valuation. Post-money valuation is pretty simple. It's just the pre-money plus the amount invested. That's 12.1 million, and that puts the value of the amount invested. It should equal the amount invested. So just as a check, let's do the share price times shares issued, and for that we get 2.1 million, which is exactly what we invested. We'll use this value in the Series B, so it's not completely redundant. After that, let's go down to number of shares owned for the founders and options. So what that is what they got from the Series Seed plus the options from the Series Seed plus the options that were issued in the Series A. So that's right here in the cap table. And mine, it's row 24, I think. So it's the remaining Series A options that we issued as part of the Series A round. So that number comes out to 1.271 million and some change. And from there, we can calculate the total shares as if converted in this round. So it's the founders and option shares, the Series Seed shares, and the shares issued to the Series A. So these are our fully diluted shares right here to make our calculations off of. To go from there, we'll do the ownership of the company by each round or class. So that is the number of shares owned by the founders and options divided by shares as if converted or fully diluted shares. That's 70%. We do the same thing for Series Seed, and then do the same thing for Series A. Do the shares issued divided by total shares as if converted. So make those a percent, just to keep it looking decent, and we can go from there. So after that, we'll come back down here to the Series Seed and we'll do value. So the value is the number of shares owned times the new share price, that's $6.68. And now we have a higher number. We have 1.5 million. The value of the Series Seed whenever they was invested was 1.29 million. So we made a little bit of money. In order to see what we made, we do the value now minus the value during that round, 1.29 million. We can see 218,982 is what has been gained from the increase in share price for the Series A. Even though the dilution occurred, so they own less. So the Series Seed now owns 12.47%, and whenever they invested, they owned 15.67%. So they lost about 3% of the total company, but gained $218,000 in value. So that dilution did not hurt them. It actually helped them. And then the value as if converted is just another check to make sure that everything's calculating correctly. So that gives us the share price basically. So it's the value divided by the number of shares owned. And it's that 6.68 number that we got as the share price right here. Okay, so let's do the same thing for the founders and the options. So we multiply the number of shares owned there times the new share price. And that's 8.491 million. And the value gained or lost is going to be the new value minus the value whenever they were issued the shares. So they've gained about 1.549 million in value, the founders and options. Of course, you have to take into account the fact that there were new shares issued as part of that. But as a class, it's gained that much value. And so the value as if converted is the value divided by the number of shares. Whoops, that was not correct. The value divided by the number of shares, not multiplied by the number of shares. And we get that 6.68 number. And then the total market cap is the total shares as if converted times the new share price. And that's that 12.1 million, which is the new post-money valuation. So it looks like all of this is working correctly, and we'll move on to the Series B.